Okay, Goldman had a good quarter.
Yes.
What's Goldman doing? Goldman's up. It's not down. It's up 3 1/3%. Many of the other financial institutions are up as well. You bought more Goldman today.
Absolutely. Goldman's back. Goldman is back to what Goldman Sachs does best. Goldman is back to focusing on investment banking, the capital markets. They spent 2023 kind of redefining the company and paring back a lot of the businesses that they had stepped into in previous years that it was new to them and they did not have the success. You look at these earnings today, return on equity basically doubles from 2023. It's now up to 14.7%. That's 7.76%. They beat the estimate on fixed income revenue above $4 billion. They beat the estimate on equity trading revenue at $3.3 billion. They basically hit it out of the park. Net income 28% higher. They hit it out of the park. And now you can return to understanding that this is the company that we used to know. This is the company that I used to call the world's largest hedge fund and the world's largest successful hedge fund. When you look at the money center banks, when you look at the investment banks, this is now the #1 stock to own. I think it's above JP Morgan.
Okay.
I own JP Morgan.
Well, you think it's above JP Morgan?
I do. I think JP Morgan, obviously JP Morgan, current valuation is cheaper than Goldman Sachs. Goldman Sachs is the premier franchise to own. And if capital markets get better, I am 100% confident the intellectual capital is there. The structure is in place for Goldman Sachs to take advantage of that. Look what they did in structured lending, in mortgages. That's where the opportunity was in the quarter. They crushed it.
Okay, so the commentary of others matches yours. Oppenheimer today, and your perfect print. Mike Mayo says the beat is likely best in breed. He's going to be with me on Closing Bell today, so we'll expand further on which stocks you need to own there and maybe which ones to avoid too. Weiss, you own Goldman?
I do, and I know it's nuanced, but I don't think Goldman ever left. I think it's always been the same old Goldman.
Maybe so, but the stock at times left.
Right. And that was headlines driven by David Solomon, going after him because politically some people inside planting the stories and trying to get a new CEO.
It took a little turn towards retail, right?
Yeah. But if you take a look,
right, in fairness, they did have some. They had at least one significant stumble in their trajectory of the business.
What did they do versus other companies? They addressed it almost immediately and said this was a mistake. That's risk management in businesses, right? And then we hear all the headlines about so-and-so's leaving to go here, so-and-so's leaving. That's always happened at Goldman. I have friends that were the most senior partners at Goldman that left, but they have a bench. And so you're not investing in individuals. As great a CEO, and I think he is, as David Solomon is, you're investing in the culture. And the culture breeds those kind of people. So that's why I've never, gone away from it. I've always had it. Every stock goes up and down. I still think it is best in breed.
And stay on that point on David Solomon, because look, let's be candid. There were people that were questioning David Solomon. They were questioning, is he the type of leader that Lloyd Blankfein was? And without question, absolutely he is. He's the right person for the job. He's done a phenomenal job. He's an excellent CEO.
All right, so Sarat, you've got B of A and you have Morgan Stanley. So we get tomorrow, both before the bell. Are there read-throughs here? It's hard to do sometimes depending on what the market's, feeling on the day, because you could say, well, JPM was good and the stock sold off. Yeah. Here, Goldman's good and the stock rises significantly.
So I think two separate stocks completely. So Morgan Stanley is going to be interesting because if Goldman's saying capital markets activity is back, that's a great tailwind for Morgan Stanley. So that's going to work well. Now,
Ted Pick's first report,
exactly.
Too, right?
So that's the other thing. The overhang on Morgan Stanley, unfortunately, is on their wealth management business, which is their strongest part of their business, which is what the SEC and other regulators are going for. So, but that's old news. So it'll be interesting to see how Ted Pick handles that on the call, and also to see going forward what he says is in terms of their backlog, capital markets activity, et cetera. They don't have that net interest issue that J.P. Morgan does. Bank of America might have it. So let's see how they talk through that one, because they will also have capital markets activity. But as a whole, I think there was nothing bad. To your point, J.P. Morgan's report was not bad. Goldman is good. The banks should, at least the large banks, should do well.
J.P. Morgan was maybe a victim of its own success
expectations
in terms of what the stock has done. It had been trading at a record high.
Yeah. So I think the large cap banks, the well-capitalized banks will do well. It's the regionals that I get more worried about just because you don't know what's really underlying on their balance sheet.
Well, so B of A, then you're optimistic about that too?
I am, because BOA has a combination of everything with capital markets activity, wealth management. That I think will be a good tailwind, good valuation. Morgan Stanley, I think, will be interesting for Ted Pick to take it to the kind of the next level.
What about Schwab today? Jenny Harrington, as they report as well, stock hits a new 52-week high.
All right, so this is what I don't like about the conversation we just had about Goldman is it's all about the story. It's about the culture, it's about the story. What I love about Schwab is it's all about the numbers. And that's what you're seeing come to pass. No,
how is it not about the numbers at Goldman?
Because they're not like this. They're not as good as Schwab's, and it's reflected in the share price.
28% jump in net income.
But you see Schwab at 40% on the year.
I knew this was going to happen.
28% jump in net income.
And you know what?
I'll let you guys go for a minute because I want to hear this.
I think the numbers at Goldman are, the numbers at Schwab I think are more remarkable. And it's been to me, it's been a more compelling and more interesting story. But as with everything, like the big shiny stocks get all the attention. The big shiny leaders get all the attention. But here you have a company that over the last year has traded down from a peak of about 90 down to the high 40s, low 50s. Why? Because a year ago there was the sell-off from Silicon Valley Bank when there started to be cash sorting. And if you went in and tuned out the noise of shiny CEO, this is a much better investment to have made in financial services. And I think going forward, it still is. I think there's less headline risk. I think there's less overall market risk to Schwab. When you look at Schwab, you've got a company that has $9.1 trillion in client assets. They brought in almost $90 billion in the first quarter. Their growth rates are supposed to be up 27%.
What are their margins on that?
I don't know off the top of my head because I'm not Josh Brown and I don't have instant recall, but you've got net interest margin. None of us are.
That was a compliment.
It is a compliment. I really wish I had Investopedia Brown's instant recall. It's so annoying that I don't. But you've got earnings that are supposed to grow by 27% next year, 22% the year after that, trading at 18 times. And I think from an environmental standpoint, I don't mean environment, from a market environment perspective, I think there's more security in those earnings where you don't need to worry about investment banking just falling off a cliff, where you don't need to worry about big personalities. You don't need to worry about New York Times stories about how there's no female leadership. And by the way, if anyone wants my opinion on why there's not, I have strong opinions on that.
You think?
And it goes, yeah. On what subject do I not? But it goes back 20 years, whatever. But I just think Schwab is an incredible. It's not.
We're talking about apples and oranges businesses, though, to be fair.
Okay, but we're talking about financial services, and I think just like the mega cap tech, Goldman takes up too much air in the room. This is just a numbers story that's incredibly compelling and has less sensitivity, less headline risk. I think it's a better.
Why can't I own both?
You
Exactly.
can. You can, but I like this one better. Sorry,
Right.
I shouldn't have taken the pot shot. I know you guys love Goldman. I just like numbers rather.
I don't have to love Goldman. I mean, I don't have to love any stock.
Oh, man, you wax poetic, though, about the culture and the leadership and your friends and this, that, and the other thing. Come on,
well for me.
What I just found interesting.
Yes, but Jenny's worked. It's worked well for Jenny, too. The stock, Jenny's stock's up more than 40% over the last year.
Unlike Jenny, I don't have to malign another
Jenny's stock is up 43% over the last year.
Let me just say, the leverage.
Sorry, I'm not maligning. I'm just making a point that numbers, I think, are more important than stories.
The leverage, the cycle that we're going to see with the IPO, with the M&A cycle, is so much greater at Goldman, to your point. So I've got excellent risk management. I've got excellent business lines from a leader in the industry, and I've got the upside of the cycle coming back.
How much is Schwab down from February of 2022? How much is Goldman down off of its high? Minimal.
So one
From February
thing, just to
February of 2022.
Here,
yes, the mediator.
Okay.
That's your new nickname, the mediator.
Okay, just to listen to her point. Schwab.
The judge has sent this into mediation.
Okay,
so you
if
guys
you remember
figure it out.
last
I'll be
year,
back in 30
Schwab
seconds.
had a huge issue with their balance sheet.
I remember.
Right. So at that point, if you took the risk, which Jenny did, and you bought it, you got a huge return, and now they've got their house in order, and it was one of those points in time. So very different business, wealth management business, net interest income business, totally good. What did Goldman do? They got out of that complete business.
Okay.
Right? So completely two different businesses, which I think are complementary. You can own them separately. In fact, a merger of those two would be really good. But separately, both good companies, both great earnings reports.
Okay, so you're marking a moment of time of when Jenny bought it. Congratulations, great buy. Now let's take the other side of that. You own this stock from the first quarter of 2022. You absorbed a significant decline. It looks like a little bit of a recovery right now. What do you do with the stock? Again, because off the top of my head, it's 20 to 25% below where it was in the first quarter of 22.
I think the point is, and I appreciate you backing up.
And this is going to be the last point, because I want to move on.
And 19 times when you have high 20% earnings growth ahead, there's a lot of upside.
So stay with the stock?
I would.
Okay.
I think that's really compelling.